Welcome to PhillipCapital Weekly Market Watch. I'm Lin Sin from Unit Trust Research. Today we are going to look into the direction of Asia's largest economy in the next 10 years. Chinese economy shifts gears as it attempts to revamp its growth drivers to win the economy off a risky investment-led growth model with a heavy reliance on exports, credit, and investment, and towards more consumer-driven growth. China's top leaders gathered behind closed doors on November 9 in Beijing for a 4-day planning meeting expected to lay out a blueprint for the country's economy for the next decade, which is also known as the Third Plenum of the 18th Party Congress. Just a brief introduction to the Third Plenum. The Third Plenum was the third meeting of the Xi Jinping-led 18th Central Committee. Traditionally, such third plenary sessions of a newly formed Central Committee have acted as a springboard for key economic reforms, which started way back in 1978 when Deng Xiaoping announced the opening up of China's economy to the world, spearheaded major market-oriented reforms, and paved the way for the country's rapid economic development. Later in 1993's Third Plenum, former leader Zhu Rongji announced the socialist market economy and dismantled a large part of China's state-owned sector. Against the backdrop that previous third plenums have had major impacts on China's development, let's take a look at the communique which outlined areas that had been agreed on during the latest third plenum. The general objective of the approved reforms is to improve and develop socialism with Chinese characteristics and push on with modernization of the country's governing system and capabilities. Some of the key issues which the communique penciled, according to the report from the state media Xinhua, are: first, to build a united and open market system with orderly competition so that the market will play a decisive role in allocating resources, and to improve market-determined pricing mechanism and deepen administrative reforms. Second, state ownership will remain a pillar of the economy. China will stick to the dominant role of public ownership, playing the leading role of the state-owned economy while encouraging, supporting, and guiding the non-public sector, enhancing its vitality and creativity. Third, fiscal reform. The reform includes building a modern fiscal system that supports the initiative of both central and local governments. Fourth, sector and land reform. China aims to improve a new type of relations between industry and agriculture, and between urban and rural areas. The relations will feature industry promoting agriculture and the two sectors benefiting each other, while the integration of urban and rural development will feature urban areas supporting rural development, giving both urban and rural land equal rights, having a unified land market, and sharing the rise of land value valley. Fifth, financial sector liberalization. To deepen opening up and promote international cooperation and competition. China would ease entry of investment, accelerate construction and development of the free trade zone, and expand the opening up of inland, coastal, and border areas. New policies will apply both to domestic and international ventures with the strategies of bringing in and going global, combined to adapt to globalization, the communique said, while calling for an orderly free flow of international and domestic factors, efficient allocation of resources, and deep market integration. Cultivation of new competitive advantages will be a priority to participate in and lead international economic cooperation. 6. Social welfare reform. Reforms would be accelerated in the social sector, including education, employment, income distribution, social security, and public health. The leaders pledged for decisive results to be achieved in key sectors and a well-developed, scientific, procedure-based, and effective framework to be in place by 2020 to ensure institutions in all sectors to be more mature. In addition, the Communist Party of China will set up a central leading team for comprehensively deepening reform. The team will be in charge of designing reform, arranging and coordinating reform, pushing forward reform, and supervising the implementation of plans. However, the reform guideline outlined in the initial communique is broad-based. The lack of concrete details or specific policies and short of bold reforms in some areas that investors were expecting, such as reform of state-owned enterprises, let investors down as the Shanghai Composite Index fell 1.8% on November 13. Challenges may emerge along the road, as any reform could potentially face opposition of vested interests who benefit from the status quo. Furthermore, implementing reforms at national level makes the economy vulnerable to sharp movements in capital markets, as firms may inherently face difficulties adapting to the transition. Nonetheless, effective implementation of reforms could accelerate Chinese economy rebalancing act and pave a more sustainable growth path. With more details on China's reform agenda to be released within next few days or weeks, the near-term market focus will likely be shifting to the Economic Work Conference in December, when the leaders will set economic goals for 2014. Thank you for watching this week's market commentary. We will see you next week.